Hey all, welcome to ShareTrack. This is Raj here. Friends, we are looking at a very interesting scenario out here. Ideally, the indices should have jumped significantly because our inflation data and the accompanying unemployment claims data all seem to indicate that the Fed will have to be benign going forward. And that should be a word of encouragement for the market, and the market should have jumped up. But the market remained tepid. It went up a little, but it was not that high. It was just a moderate positive over yesterday's closing. So I want to examine the reasons why, and that's what we're going to do in this video. So before I proceed, I would request that you please subscribe and press the notify button so that we can grow this channel. That said, let's get started. Welcome back, friends. Consumer prices in the United States rose again in April, and measures of underlying inflation stayed high, suggesting that the rising costs could persist for months to come. Prices rose 0.4% from March to April. The government said Wednesday, up from 0.1% from February to March. Compared with a year earlier, the prices climbed 4.9%, down slightly from the March year-over-year increase. And the nation's inflation rate has steadily cooled since peaking at 9.1% last June, but remains far above the Federal Reserve's 2% rate target. The Fed is paying particular attention to so-called core prices, which exclude volatile food and energy costs and are regarded as a better gauge of longer-term inflation trends. Core prices rose 0.4% from March to April, the same as from February to March. It was the fifth straight month that the core prices have risen 0.4% or more. Increases at that pace are far above the Fed's 2% target. Compared with a year ago, core prices rose 5.5%, just below a yearly increase of 5.6% in March. So again, that's a trend a little bit downwards. So that should be a positive. Inflation at the wholesale level was a bit cooler last month, though economists expected, and so was inflation at the consumer level. So both at the wholesale level and consumer level, the inflation was a bit cooler than whatever the economists had expected. So that's again another positive for the stock market. A separate report on Thursday said more workers filed for unemployment benefits last week than expected. That's bad news for workers and adds to the concerns about a potential recession because the job market has been one of the main pillars propping up the economy. All this indicates a benign interest rate regime ahead. Ideally, the share prices would have gone up, given that 1-2 punch of moderating inflation coupled with increase in unemployment benefits claim. However, the share market remained subdued due to a bunch of reasons. The Disney earnings result cast a gloom on the market, along with fears of possible regional bank failure of some kind. The broader concern is that the industry's troubles may cause a pullback in lending, which could hurt the economy. In the meantime, the US government is edging closer to the June 1 deadline, where it could run out of cash unless Congress allows it to borrow more money. Economists say a resulting default on the US government's debt could be catastrophic for the economy. I've spoken about this at length in my earlier video this morning, so I won't dwell on it more than that. So what do I think will happen next? If it was not for the debt ceiling drama, I would have said that we would continue on a bullish trend. When I look at the QQQ price chart, I'm thinking that 334.17 will be a point of decision. And I think that we may approach that point around 30th of June, when the debt ceiling crisis will have to result in either resolution or default. Once the debt ceiling is resolved, the stock market will take off, and I think we will be in a better situation, and our portfolios will slowly start coming back into the green, and all the bad times that we have had will be a thing of the past. So that's what I'm hoping for, and those good times can't come quick enough. What do you guys think? Really like to know. Please put it in the comments below, and I read each and every of your comments, and I respond to almost all the comments. So it would be very interesting to hear your point of view. Take a little time, give me your feedback. With that said, I'd like to end this video here. Thanks and have a great day. Bye for now.